right, Market Timing Academy here. Today is January 23rd, and we're going to do a quick follow-up video on Netflix, a stock that we highlighted last week. We had noted that the stock had gone through a couple good bases and had nice uptrends as they broke out of those bases at these points. And one of the areas that we were highlighting last week was right through this area of a new base. Now, before we talk about how we trade this stock and what we talked about last week, I do want to highlight something very important about what's going on in our overall market at this stage. So let's take a look. All right, let's take a look at what's been going on here with the NASDAQ composite. This is a daily candlestick chart with a 50-day and a 200-day moving average. You can see that the stock has been in a really nice uptrend here for the past few months, but I want to highlight an area of concern, and that's right through this space right here. You can see that just recently the NASDAQ has had two big down days on significantly higher volume, and you can see that the MACD has rolled over. The bottom line is that the two distribution days that we've seen here with the NASDAQ bring us to a total of 3 distribution days, which simply means that the market is now in an uptrend under pressure phase, which means that you want to be very, very cautious with new buys. So I just wanted to highlight that. Now let's go take a look at the stock that we're analyzing here. All right, so now that we have a better understanding of the fact that the market has moved into an uptrend under pressure, we need to show extreme caution. Now, last week what we did was we highlighted this area where Netflix is going through a nice kind of cup-shaped base, and we highlighted that your ideal buy point would be as it crosses through this level right here, which is roughly $197 a share. And since then, the stock has rolled over and come back to its 50-day moving average, which I believe has a lot to do with the overall market rolling over here with its distribution days, as well as that bad news that we got on Apple that Steve Jobs is taking an indefinite leave of absence. And so this shows you why you don't chase a stock. We talked about it right in this area here, and you could have just bought at that stage, but technically you want to wait until you cross through that prior high or have an actual breakout. Now what's happened is the stock is now sitting on its 50-day moving average right in this area here, and you can see that on some of these down days, we've seen those down days on bigger volume, and we've also seen the MACD roll over. And so we've got all kinds of good news. The market's in an uptrend under pressure. The stock's rolling over on heavier volume. The tech stocks are dropping one by one. And then to make matters even better, you've got earnings coming out on this stock here on January 26th. And so, I hope that Netflix offers good earnings that day. But nonetheless, if you own this stock, keep your stops very, very close. You're going to want to keep your stops right around $175 a share if this thing does roll over. If you don't own the stock, be very careful right here. I would not be buying it, even though the 50-day moving average is a nice buy point. Why don't you just wait until the stock rallies back up and has an actual proper breakout? And also, let's see what those earnings are going to look like. So this is the Market Timing Academy giving you a quick little follow-up video on last week's weekly stock analysis. If you'd like to learn more about what we can do to help you trade this market, go to www.markettimingacademy.com. We'd love the opportunity to help you out.